What's happening, guys? I hope everybody had a fantastic weekend. Today is June 2nd, and we've got a full week ahead of us. Last week we only had a 4-day week, but it definitely did not seem like that. We had quite a bit of short squeezes going on and a lot of momentum that just came back to the market. So it was really nice to see. And it also, gave us some incredible opportunities on both the long and the short side, just because FOMO was at its highest. That's fear of missing out for those of you guys that don't know. And typically what happens is there's this first mover, and for example, SOLY. Not too much was going on, not too much was ripping the last couple weeks. I mean, there was definitely some runners, but if you overstayed, you ended up giving back a ton of money, and liquidity was there, but it was starting to kind of fade off, and there were a lot of the Nasdaqs were starting to take at least take most of the space on my main radars, instead of these small cap momentums. But all of a sudden, SOLY decides to rip up from 6 to 7 to 8 to 9, trap around 9, and run all the way up to 13. Trap there, run to 16, and then 22 after hours. The next day it hits 28. Ends up unwinding, and it's been consolidating since around the 17, 18 to 20 plus range. And it's really offered some fantastic opportunities just on that stock alone. But with that said, it brought back a lot of other big moves. So we have SOLY here that you can kind of see. This was the first day. This was Tuesday. This is kind of how we started the week last week. And then the next day gapped up, pulled back, and then even yesterday, being Friday, or 2 days ago, had a nice little rally back. It is still starting to consolidate over this recent support, so it's definitely going to be interesting. And in ELTK, there's a good chance this wouldn't have happened if SOLY did not happen. And we also had SBOT, which was another one, and that put in about almost 50 million shares traded on Friday alone. So pre-market was responsible for painting a little bit of that picture where it kind of just started inching up from 7 to 8 a.m. I really didn't expect it to go that far, but at the same time in this market, one of the things that I've been repeating a lot is just to, let it rip, let it do its thing. I'd rather be a little bit late to the name than, 20, 50, $1, $5 too early. And, when we have so much range in this market like we do right now, you don't really need to nail the top. There's a lot of opportunity on the backside. From this point forward, when it went up and basically retested and failed, you had quite a bit of opportunity. Even later on in the day, rather than trying to find the top, when it came back and it failed a few times right over here, you still had a huge opportunity. So we were able to take advantage of both those moves in the room. And again, reminding people not to kind of get bent up on the way up. Once again, it went a lot further than I would have anticipated, but with that said, it's all about having the proper risk, the proper size on the front side of the move, because one of the things that happens in markets like this is we all get too excited too soon, and we end up exhausting ourselves on the front side of the move. And then when it's time for the actual trade, we're so exhausted, we're so, our confidence is at the lowest point because we overstayed, we got nervous, we took off the trade emotionally, and now we actually have some emotional attachment and involvement within the trade, which is never good. So with that said, ELTK was a similar situation. A lot of people were trying to find the top on this thing, and I'm not going to say I wasn't trying to get in there a little bit on the front side, but the best thing that I did is I went ahead and took it off. I minimized my losses. They were very, very minimal, and nailed the backside of the move the last 2 days. So that was really happy. When you take a step out of trying to nail the top and you actually look at what's going on, you would actually notice that there was a huge seller at 1050 each of the times that it tested, and then there was a couple of those outlier type candles that went through it. So knowing that, seeing that, being able to act without emotion at 1050s and actually be sort of on the offensive side with a clear head, I think is what really helped me nail the trades as I did. Just because, I've been on the wrong side so many times that you start to kind of pick up on things, and really it's just a waiting game. Be patient for your entries. Be patient for it to start to show signs of failure, and I think it's going to probably help you out in the end. So with all of that said, I've got three main reasons why this week was really good, and what it was that I was focusing on. And one was, like I just was explaining, cutting off what was not working. So many times we try to focus on finding the top. We try to get in there a little bit premature, and you end up exhausting. Even if you're right in the end, that doesn't mean that point A to point Z is going to be easy. And so you have to stay focused. You have to stay, really patient and let the trade come in. So that's exactly what I did with that. And focusing on the meat of the move. You don't necessarily need to find the very top. A lot of people, including myself, sometimes we post and like, oh, great, got the top and whatnot. But I think it could potentially send the wrong message in the sense that, a lot of times you'd be surprised how much meat you can actually get in the middle by, waiting for that trade to come in, starting in, scaling into the trade, and then also not waiting for the exact bottom, but waiting for that liquidity event to take advantage of. And, for example, something like SBOT on Friday, SBOT, it was a fantastic pullback throughout the day, and, you could have easily overstayed, but it was sideways, and right around the 180, 185, 190 level, and it had one little pullback to about 181. And I was actually at 176 waiting to cover that entire time. And by the time it got down here, it started to go sideways, and I started to kind of question whether or not I should probably, lock in a little bit more. So at any rate, without a doubt, I covered some into this flush under the 190s, and then I started to cover here. And when this did not break down right here, I covered a little bit more. And the reason for that is because we're going for the meat. We're going for the meat of the move, not the entire move. Because what happens is when you go for the entire piece of the move, you might end up getting a little stubborn, and then it starts to ramp up, and then it goes up. And now you've sized in, you've been patient all day, and now the emotions come out, and you're the guy that's covering into this move, and you end up having not a clear head, and you miss out on this opportunity into close. So that was one of the biggest changes that I've been really, really focused on, and it's really worked out very well. And then same thing I said earlier is, not being the guy that gets the top. Wait for the trade to come in. Wait for the big picture type of opportunities to come. And when we have range like this, you're going to have so much potential that you don't need to nail that top. All you need to do is get in there with less risk, because the range is so big right now that you really just need to get on the right side of the trade. So let's get into Monday, what we're looking for. So DMPI was pretty amazing. This was DMPI. Can't type today. This was a fantastic alert. They had an 8K late day, T530 in the room. Found it and put it out there. And, I got long at 215, and I pikered it out like crazy. I ended up selling even before this first halt, unfortunately. Still a good trade, but I definitely was long there, and I definitely sold way too soon. And it ramped up, started to squeeze, and so I went ahead and I started to locate some stock just in case it got wild. I did not expect it to go 3, 4, 5 or anything like that. So I started to just dabble into the ramps, just small. A situation like this, there's no way I'm going to go past maybe a quarter size or something like that, because you never know. You never know which one's going to catch. So At any rate, I let it do its kind of thing and traded around the core, ramped up, and I noticed some bidders over here trying to force it up on the bid side and sell hiddenly. So basically, you saw a lot of big, large bids come up on the left side, and then the offers did not show much of anything, but they were selling a whole bunch of stock. So in other words, hidden sellers. So you might only be able to see 500 or 1,000 shares, but as the volume hits, they were definitely there. Meanwhile, the bid is showing, these eager buyers of 35,000, 20,000 shares, and when it starts to come back and actually retest it, they pull the bid, and it's gone, and then they flush out just like this. So each time they pulled the bid was one of these candles. So that's also the importance of having wish orders out there. Wish orders is a term we've used forever as far as, thin names like this, where, where would you wish to cover it? And basically when it starts to open up, in other words, when it flushes out and it kind of unwinds and it does this big move, the idea is that you end up filling them on that pullback. Just in case it just flushes out and comes right back up, at least you get the fill. So at any rate, I would suggest this is a great stock to go back and look through the warrants so you're familiar with what they have in store for this week coming up, whether or not they can raise, whether or not they need money, whether or not they can actually do it. Is it effect? Is it ready to go? And I think a quick glimpse at the filings will tell you exactly what you need to know, as I kind of hinted on Friday, especially over the 440, over the 5 levels. It didn't really start to make sense. It just seemed to like a lot of FOMO to me. At any rate, SBOT. I don't think we're going to gap up, but ideally, higher the better. So with that said, back to DMPI real quick. Let me finish that train of thought. So higher the better here. Hopefully we get a retest towards 450, something like that. Hopefully it walks it up pre-market. Hopefully people got a little bit too aggressive into Friday. They held it over. Hopefully we don't get an offering, and hopefully we have a nice opportunity. Again, back towards the 3s, 2s, and so on and so forth. Moving on. SBOT. Higher the better. So huge volume, but man, did they sell hard. This thing is known for gapping down the next day. I'm really hoping the fact that it was kind of around 2, that it might start to maybe cause people to trade it just because it's around 2 and they get excited and 190, 195 hits, they play for the 2 break, and hopefully we get another push towards 220s, 225, something like that. I highly, highly doubt it, but I want to be prepared in the case that does happen. I would absolutely love to fade it again. Otherwise, if it does gap down, I'd be looking for it to retest this level over here. And I have no problem joining that as well, because look, even if it opens at 180s, 170s, and it ramps back up to 180, 185, there's a good chance that it ends up at 140. So I'm happy trading it even if it gaps down, it opens red. A lot of people take that kind of stuff off of radar, but I think it's beneficial to leave it on radar. SOLY, I've had a really, really good read on it this week. It's been a fantastic gainer, especially this first day, but also this second day, both the long and the short side. Same thing on Thursday, rather. It turned into a really, really big mover. I played it off the 17 base, 17 18s, added 19s. You guys saw that I posted the trade recap on it. And then again on Friday, I also got long, and I was trading the same way. I was long pre-market, basically the same kind of thought process. I really did not see a reason for it to gap down. I traded the washouts. I actually had a pretty decent position, and I was styling up here at 2150s, 2170s, and I just kind of thought that it was going to pull back, consolidate, maybe hold over 2050s, 21s, and it didn't. So minimize that trade. After I had scaled in quite a bit, it pretty much brought me back to my average and under it. So I went ahead and moved on. I traded the flushes down here, and sold into the ramps, but that's about it. I am keeping this thing on watch. I just, it trades very thick. It had a lot of volume. You can see, it had the almost 25 million, 20 million, and then 10 million. That's a lot of volume, and I think that it's trading relatively thick compared to what the actual float is. So I just feel like they're kind of consolidating it, letting shorts get comfortable. And if this thing does retake 20 and it starts to base 2050s, 21, 22s, I really, if I'm going to get bullish about it, I need to see 22 kind of basing. And until then, it's just a shot in the dark. But this thing is not coming off my radar. I just have a feeling that there's a lot of people short. There was a hit piece that came out days before this thing skyrocketed, so they all got bent up. And then the author of the newsletter came out the same at $10 that first day, and then again saying he would be shorting. So anybody that listened to him got absolutely hammered. And typically they do have a little bit of an impact on a stock, it's getting progressively worse. But regardless, I mean, there's still a lot of people that just need to be kind of told to jump, and they do, and then they end up getting ran over. So it was a good recipe for a disaster for the shorts there. And again, we'll see what happens. It's nothing that I'm too overly aggressive about right now. Like I said, I need to see these things start to align. And as they check off those boxes, then my thesis comes true. Until then, for right now, as long as it stays under this 1950 level, I would assume that it's maybe going to fade back to 15. Gap fill, something like that. So again, I don't take what I'm saying as crazy bullish. All I'm saying is that if we start to see it base over the 2050s and kind of poke up towards that 22, if 22 starts to be the bottom for a couple days, if I was a short, I'd be nervous for, honestly, 30s, 40s, something crazy like LFIN. But again, for right now, I would assume it's just going to gap fill back down to 15s until it starts to base over those levels. ELTK, it's gapped down the last few days and it's already come back. So even if this does gap down $1, this is the type that probably will pull back, $1 or $2 anyway, more. So definitely gonna watch. Definitely potential. I've had a really good read on it recently, so hopefully we have more opportunities like that. You can see the failed follow through momentum, failed follow through versus VWAP over here, and it's just really about not oversizing and just letting the trade work for you. This might be a tough borrow for some people, but like I said, it was very surprising to me that there was so much inventory available on Friday, and it kind of reminded me of AWX, where it's such a thin float, and all of a sudden they had 400, almost 500,000 shares available, and I was like, whoa, given the float, the fact that they can locate a couple 100,000 shares, which are deliverable, meaning that they'll actually deliver those shares. It's not just like turning on a switch or something and making it shortable like some places may do, but these are actual legitimate shares that you could borrow and have full delivery on, which kind of made me think, wow, maybe there are some sellers available for this thing. So anyway, GNCA, that's the only other one that's small cap of interest. The other ones start to get into a little bit more NASDAQ-ish big cap type names, but GNCA, also another one that you should be familiar with the filings. They pumped a lot of volume into this thing. It's a lot thicker than people think. And, ideally we go back and retest towards this six level. Look left to predict the right. A move like this, it was for multiple reasons. One is it's kind of before the market had a chance to develop. A newsletter came in there, and there's just a lot of FOMO in this market right now. The fear of missing out. They don't want to miss the next ELTK. Somebody sees it rip up into a halt. They think it's a smart idea to buy. The gap opens, and you end up getting beat hard. So one other note related to this particular name is this move right here. And, it's not any type of I told you so type situation. Because look, I didn't short this move. It wasn't really a trade for me. It was still kind of too thin. But what I want you guys to see here is the same discussion that we've had on the YouTube video on the failed breakouts, as far as kind of expecting this move to fail. And, sometimes we look at it and we get all excited and we're going to buy for the breakout, anticipating a breakout. But the point here is this is a perfect example of what a failed breakout looks like. It's coming from under VWAP. So number one, you should assume that it's going to, if it does break, it's going to stuff. And the only time that I like it is if it were to stuff, pull back, consolidate, and start to grind off that level above VWAP. But for anything that comes up under VWAP and through it, you should assume that it's going to stuff. You should look left, look at the resistance, and you can see just by drawing a line across, you can see how many times it failed at this level. And then once again, it failed the very last time and then faded right off the 720s or 730s or so down to 580s, 560s, literally 10, 20, 30 minutes later. So it's almost a $2 per share move, which is pretty big. So be cautious with these types of momentum trades. And again, if you guys don't know what I'm talking about as far as how to anticipate this type of move, then go to YouTube and go to our Investors Underground channel and click the recent uploads, and you'll see, I think maybe 4 or 5 videos ago, the failed breakouts that we put out there, and it's the same exact topic right there. BYND, higher the better. Huge move into the close. They've got earnings coming up. I don't even know when. I think it's this week or within 10 days, I think. But big squeeze into the close. Likely some folks closing out into the weekend. But higher the better. I'm not trying to find the top on this thing. The only day that I was interested in shorting it was the day that it gapped up, $6 or $7 and then squeezed out a little bit more. So, with that said, it was 92, 30 minutes to the close. It ramped up to about 99. The next morning, it's almost, 105. So that's why I shorted this day when I went over that on the recap. And then, so the only way that I would do that again is if we were to gap up, something like 110, 112, and ramp to 117. That would interest me. That's what I would compare to a move like this when I shorted it. Otherwise, the only way that I would probably short it is if we start to peak at 103s and probably use a 104 risk. And the reason for that, you can kind of see some resistance here at the 105s, but again, I don't want to be the guy that's trying to find the top because I could be shorting at 105, 108, 110, 115, and panic cover at 120. That's not for me. LK, nice ideas last week. Idea was week open for potential 1920, and pretty good recovery so far. So they screwed everybody on the IPO day. Obviously, I had huge volume, 40 million. Shares traded. I was short this day, 2560s if I recall correctly, 25s, 2450s, and rode it for a good majority of the trade. It ended up being a pretty good trade. And each day I traded it, except maybe down these days. And I was waiting for it to rebound. It never came, and then all of a sudden it did, and it just has not looked back yet. So look, this thing could keep on going. But if it doesn't and it gaps up and it has trouble, I'm very much interested because I think it can unwind very, very nicely, especially after candles like this. But right now, feels like it's in squeeze mode. So don't step in front of it. Expect the unexpected. Stay safe. But I will definitely borrow shares if it starts to get interesting. AIHS is just an interesting one to me. I'm just taking note on it. Potential swing. But you can kind of see this does not look natural by any means. Kind of looks like there's an algo or something going on that's kind of creating liquidity, slowly staircasing the volume up. And even throughout the day, there's if you go back a couple days and whatnot, it just seems like it's some random blocks that just seem unnatural. So I'll be watching dips versus basically 5. and who knows, maybe this could turn into something. So again, no position at this time, but it's had a history of doing some crazy things. It's also had some histories of really unwinding. So just be patient and look for opportunity, but nothing I absolutely love. As far as a couple more big caps, GPS, pretty good rally on Friday. I'd be looking for the similar kind of action. Week open and then maybe a rally back. We could be going back to 20, kind of go fill that gap. It's been pretty beat. So sometimes what happens is these things, have already factored in earnings, and then they gap down, and then they just do it anyway, and then they use that as a buying opportunity. They buy it all the way back up, and we've seen this time and time again. We have not seen it on FL, Finish Line, and Stamps, that's for sure, but we have seen it on many other trades, especially after gap downs. They end up coming all the way back. So just an idea. CC, every day this has been a fantastic opportunity. Still thinking teens on this one. I've been talking about it for quite some time, and I mean, it still has yet to bounce. I think it needs to panic sell, maybe into the 19s, 17s, something like that. But for now, each day the morning fails on VWAP, it's been a pretty good trade. So it's worth keeping an eye on it, but as it gets lower and lower, I think it's going to get more and more interesting, especially if the volume starts to pick up. And I'm keeping an eye on it because the day that it does bounce, I want to be there. So that's the game plan for this week. Again, usually in the morning I add a couple names to watch, but it's not something that I'm going to trade every single one of these. I want to be familiar. I want to know what all these daily charts look like, because that way I can be that much more familiar with the names when and if they hit scan. The example that I gave this week was MAXR. And if you guys remember, MAXR, despite coming in, I was bearish as heck after this pullback, after the earnings. And so each morning it was a good short for a couple days for me. And then it started to just kind of unwind. You can see it started to base over here at 7s. But the day that news hit, because I had stayed familiar with the chart, because I had kept on, basically reviewing it, it was a huge opportunity, because I knew that at 7:20 when I saw the news that was essentially a 20-cent chase for me, and of something that could potentially run $1, $1.50, maybe even more. It could have gone 2 or 3. It could have been like a Soli, SOLY, where maybe it caught a bunch of shorts. And so I knew from just having the chart in my head that this was no-brainer chase. And had I not gone through and looked at all these charts and whatnot on a nightly basis, I wouldn't have known that. So that is the real point of doing scans. It's not necessarily that I'm going to trade every single one of these tomorrow. It's about staying familiar, seeing the charts, and being able to react that much quicker. So that is the game plan for tomorrow. If you guys have any questions, leave any comments in the comment section. More than happy to help out, and I hope you guys have a good rest of the weekend.